Thank you for listening to CFB Talks Digital Assets. This recording is for informational purposes only and should not be considered investment advice. It is not intended, nor should it be considered an invitation or inducement to buy or sell any of the underlying instruments cited, including but not limited to crypto assets, financial instruments, or any instruments that reference any index provided by CF Benchmarks Limited. This recording is not intended to persuade or incite you to buy or sell a security or securities noted within. Any commentary, interviews, and discussions are opinions only and should not be considered a personalized recommendation. Please contact your financial advisor or professional before making any investment decision. Some of the underlying instruments cited within this recording may be restricted to certain customer categories in certain jurisdictions.
I think, generally speaking, the appetite for crypto in Australia it's huge. Australia had some of the biggest volumes in the world for, the big name exchanges that we all know, and it was kind of the right timing for these ETFs to start getting launched around the world, because the big money's here. They see the space and they want in.
You're listening to CFB Talks Digital Assets, the home of informed conversation about crypto for institutions building the future of finance, presented by CF Benchmarks. Hey everybody, I'm Ken O'Delaga, Head of Content, and as usual, I'm joined by my colleague, Gabe Selby, who's Head of Research. Hi Gabe.
Hey Ken, hope you're doing well. I think we got a nice, exciting guest here for this episode, joining us from the Southern Hemisphere this time, right?
Exactly. Yeah, this time we are excited to continue our journey with our long-standing Australian client, Monochrome Asset Management, who are just about to launch their first spot Bitcoin ETF, Monochrome Bitcoin ETF, ticker IBTC. So to get us up to speed, we're fortunate and very grateful to be joined by Grayson McLeod, Monochrome's head of ETF operations, who's not only taking time out for probably one of the most busy times of his life, but is doing so at an ungodly hour as well to boot. So Grayson, thanks a lot for this.
Nah, thanks, Ken. And it's not ungodly yet. 9 p.m. for me is still the middle of the day.
Okay, cool. Yeah, for most of us, actually, yeah. So clearly, in this episode, we'll be all over the upcoming watershed that the IBTC launch will be. And we'll also try to get a feel for how things currently stand in Australia's institutional crypto industry more generally. So IBTC will be one of only a handful of Australian crypto ETFs, and in a very real sense, the only pure play Aussie Bitcoin ETF. We'll look back on that idea later. So Grayson, we were lucky enough to be joined by your CEO, Jeff Yu, back in the September 2023, I think it was. But there have been a fair few developments on the road to Monochrome's ultimate goal of launching a spot Bitcoin ETF since then. Probably the headline one being the switch from ASX to Cboe Australia as the listing venue for IBTC. What's the background on that decision, if you don't mind me asking? Yeah,
I mean, look, we were pressing for the ASX for a couple of years actually, and it was a long journey, a lot of back and forths, a lot of lessons learned, and full credit to the guys at the ASX who were pushing us along. There's some proper legends in there that we really got along with and were great to work with, but ultimately, despite them saying that there was an appetite for a Bitcoin product, the timelines kind of just getting pushed out, right? And I want to make it clear, we were never declined. It was just this endless roadmap that never seemed to have an end in sight. And not throwing anyone under the bus, it was just the situation of it. I think what we found out was their pipeline of products to launch was just so clogged up, and they weren't at the position to kind of prioritize a crypto product, and it's just the way it was. Throughout that time, we started linking up with Cboe. We had discussions with them for quite a while, and ultimately it just came time to make a commercial decision, and we need to launch this thing. So Cboe have been really good, and ultimately all the brokerage houses in Australia link into both Cboe and the ASX. Cboe at the moment does something like 45% of the volume for ETFs. So it's by no way this kind of small exchange. They're rapidly growing, and they've got the mindset of people that we want to work with, looking forward, getting these products to market, looking into the future, and just getting things done. And that's the way we roll. So yeah, it's been really good.
Well, I think, hindsight 2020, it's certainly obvious that the demand for, Bitcoin, particularly in the US, is quite strong. I mean, if we look at these products that were recently launched earlier this year, these are the most successful products, in history out of any ETF launch. In most cases, and in one case, it is the most successful ETF launch in the world. So it's something to kind of reflect on, for any other companies or any other regions that are thinking about launching, Bitcoin products. You can use the US as kind of a test case for demand and say, well, it's clearly there. And perhaps maybe before we jump into, diving deep into IBTC, would you mind giving our listeners or viewers a little bit of background about the fund? Is it a private fund? Is it available for retail or institutional investors? Just kind of give a quick high level catch up, if you will, on the fund.
Yeah, 100%. So it's a retail fund operated under a crypto authorized license, which is something very unique in Australia. So this fund launched actually in March 2023 as an unlisted fund. So once we go live, it'll be a dual listed fund. You can actually access it as an ETF or as a off-market fund.
Pretty unique.
The crypto, the crypto asset licensing was key for us to launch this as an unlisted vehicle and kind of get that head start and hit the ground running when we started talking to the exchanges. And very vanilla fund, tracks the price of Bitcoin to your amazing benchmark. Daily fund, in and out, super vanilla, but does the job.
And so, yeah, as you were mentioning, it does strike the NAV. It does create redeem with the BRR reference rate, the flagship one. But as I understand, that was the London one beforehand.
Correct.
And now you've transitioned over to the Asia Pacific variant, which we recently launched, which I would say is pretty significant. And would you mind sharing your strategic thinking behind this move and how it positions your organization going forward?
I mean, it makes sense. And I have to say thank you guys for building it, because it means that we don't have to execute at 2 a.m. Sydney time anymore. So the 4 p.m. Hong Kong benchmark is a bit of a godsend. And what it does for the Asia Pacific market is brings the volume, brings the money, and puts a spotlight on a trading hour for these products to exist. We were gearing up to do a bit of cool marketing around being the first to have this benchmark, but our Hong Kong buddies beat us to it. But that's all right, because the more people that come in ultimately benefits everyone. But yeah, Hong Kong makes it so much more operationally efficient. And one of the things that we went through when listing was, how do you guarantee the off-market people that buy without the ETF are getting a fair price compared to the people that buy on-market? Well, the answer to that is that the benchmark is that much closer to the close of the Australian trading hours. So that was a huge plus for us.
Well, what you were saying about the volume and liquidity is particularly true. Most folks probably don't know this, but with the original BRR, which is strikes in the London close, that meant that, most liquidity that we would observe in our constituent indices, or our constituent exchanges, we would observe that was kind of like the most liquid window for striking NAVs. After the launch of these US spot Bitcoin ETFs, which have been colossal in size, we've actually seen the majority of liquidity shift from London to New York close. And perhaps maybe the Hong Kong, strike will never overtake the New York. But what you could expect is just, more liquidity being distributed across these different time zones, basically maturing, the Bitcoin market structure by providing more volumes, which is something that, is going to benefit, investors across the world. I don't think it's advantageous probably to have such concentrated liquidity strikes, in certain time zones, but more so to just kind of elevate volumes and liquidity across all these different regions, right? So that's going to be something to see. It's going to be interesting to see how that kind of evolves and see how this Bitcoin market structure matures in these next few years as, we see IBTC or these Hong Kong funds, become more, adopted over the next, let's say 12 months or so.
100%. And just adding on to that, one of our goals here is to build feeder funds out of the APAC region into Australia. Australia's financial regulatory regime is actually quite strong compared to a lot of other countries in the region. So there is an opportunity there to build funds coming in that can leverage off that structure that we have. So the BRR-AP definitely helps us out there too.
Let me ask you real quick. So as we see kind of IBC evolve from this a private retail fund to this kind of dual, listed / retail fund, are there going to be any key operational changes that you'll have to do, or how does this transition work?
Operationally, it's actually quite easy. The main push was from the legal side, but operationally, the execution is exactly the same. All we're doing realistically is adding in authorized participants into that mix. So we're buying and selling with them and issuing them units. There is a little bit of a piece around, we have to abide by certain monitoring and reporting obligations for on-market stuff, any kind of breach of tracking or any kind of weird thing that happens on market has to be reported and closed out. But other than that, like the fund that we've been operating for the last year is exactly the same. And like I said before, it's given us the opportunity to really hit the ground running. So it's kind of played out pretty well.
I just wanted to circle back on that whole idea about the evolution of the global liquidity picture, that the development of the BRR and its variants, BRR London essentially, which references the London closing time of the London markets, and then of course followed by BRI-NY, which references the US traditional market closing time, and then finally BRI-AP, which references the HK stroke Singapore, I think it is identical to closing time. In the beginning, clearly when BRR was initially launched, it probably struck some people as being somewhat odd because it essentially was a 4 p.m. London closing time, which was essentially made for the entire institutional crypto complex, right? Which essentially was mostly in the United States. But if you think about things, that was probably quite convenient. You actually do want that long window from, I think it's 11 o'clock, 10 o'clock or something like that, midday, the latest, from the close of the trading on the institutional market, which is essentially the CME, which is, what the BRR was initially launched for. You want that long window to basically sort out any sort of nonsense or stuff, as you suggested, that can happen between that time and when the market reopens. But of course, since then, as the market has matured, got a bit safer, more safeguards introduced, regulation, higher liquidity, it does make sense to have these other cuts throughout the global trading day. And that's essentially what we're seeing. And I think, in a way, the Monochrome decision reflects a little bit of that as well.
Look, ultimately, had it not existed, we still probably would have gone with the London time zone, just because of how good your guys' product is. Like, all the research and development that comes with it has helped us so much in saying why our product is so fit for market. It's because it has this highly robust benchmark sitting behind it that lets people have that courage, or not courage, I should say. What's a better word?
Similar.
Sure, thank you.
Reassurance and confidence, maybe.
Reassurance. They know
yeah.
they're getting a fair price with no manipulation, that's being sourced from proper, data sources, and they're not getting a haircut, like going on an exchange and just being told a price. Like it's been really good. So,
absolutely.
yeah.
So let's dig into IBTC a little bit in the next section. Let's talk about some distinctions, because this thing is very unique in many ways. Now, one of the sort of like topmost ones, if you like, from a visible point of view, it may seem trivial in some ways. In some ways, it's actually quite important. There's been quite a bit of debate about which Australian Bitcoin ETF can claim the accolade of being the first authentic spot Bitcoin ETF. My understanding is that based on ASIC's technical specifications, IBTC is still the only spot Bitcoin ETF that's fully adherent to Australia's licensing framework for digital asset investment funds, and is consequently the only product that can actually operate as a pure Bitcoin investment fund. Is that an accurate characterization, Grayson?
Yeah, I don't want to pick any fights,
No.
but look, we set out from the beginning to do it all by the book. As soon as ASIC came out with Info 225 and the crypto authorizations, it was like, righto, we have to do this. What our peers have done is create a wholesale fund that buys Bitcoin, and then a retail fund which buys into that wholesale fund as a way to get around having the crypto license. From my point of view, what's the point of the regulator issuing this license if you can just do a wholesale retail feeder structure and not have to have it? The license was set so that they could investigate the structure of the fund and make sure that it's actually ready for market. Things like custody, making sure that it's up to the RG133 Australian standards, and things like the benchmark, which has to be IOSCO certified, properly robust, all the manipulation resistance that you could imagine, exactly like what you guys have done. These kind of safeguards that you would expect financial products to have in place. So
yeah,
that's where the the battle
distinction, right? Yeah, absolutely. I know
the distinction. That's a better word for it.
It's important. I mean, it's sort of like, well, we were first, but actually, it is really important. The reason why it's important is because of all this stuff, and it does actually bring the other point that I wanted to make. Basically, the material considerations for this are essentially investor safety. There's a reason why
100%.
the ASIC actually instituted these measures. If you could sort of, I think you've done it a little bit, but if you could sort of like just briefly, top level, what are the material implications in terms of investor protection that the full authorization provides?
Yeah, I mean, the two that I mentioned, the benchmark, so transparent pricing has to be robust, can't just take any source and use that to stick a price on the fund. The custody, we got pretty lucky with, actually, because the main bank in Australia, the Commonwealth Bank, they had a crypto project that they were working on with Gemini, who's our custodian. That got scrapped. We came in the back and kind of scooped it all up and leveraged the good work that they did. So thank you, Commonwealth Bank. Otherwise, making sure all the insurance is in place and the competency of the team that runs the product. So there was actually a due diligence aspect on us as the managers of a crypto fund. Have you guys ever touched crypto before? Well, yes, we have. Like between us here, like there's decades of experience. And if you want to hear a little bit more about that, maybe go listen to Jeff's podcast. But yeah, like all the things that you would think you would want to hear to ensure that the guys that are handling your money know how to do it properly. That's the point of the licensing.
Yeah. Let's talk about the dual access mechanism, which I believe is linked to IBTC's initial structure as a private fund. That also makes it quite unusual, as you've sort of touched on earlier. Can you explain a little bit about that, please? How does it work in practice? Is there a reason for it, or is it just an additional facility for investors who might wish to, interact with the fund in those two different ways?
There is a big reason for it, and that is so that there is an easy way for investors to leverage the fact that it is a bear trust,
Right, good point.
and redeem Bitcoin out of it. So the on-market versus the off-market is two different holder numbers. It's a HIN and an SRN. If you want to convert your ETF units to off-market, you got to go from HIN to the SRN. And what that does is enable people to call upon the Bitcoin that backs the units in their fund, and take self-custody of it. Without that off-market aspect, we wouldn't be able to have this bespoke, hands-on approach to doing that mechanism. Obviously, whenever you're transferring Bitcoin, it's a very serious thing, and
yeah, potentially risky as well.
Yeah.
Right. Yeah.
And having it with the unit registry off-market allows us to do it safely.
One other distinction that most people might not be aware of, but IBTC actually kind of stands out from its US Bitcoin ETF counterparts by offering in-kind, create, and redeem. So that's something that, was highlighted quite a bit as the US spot ETF were kind of in the approval queues. I think it got striked out at like the last second. And so essentially these US spot Bitcoin ETF issuers have to create and redeem in cash. They cannot give Bitcoin back. They have to sell the Bitcoin and offer cash back. We had Matt Hogan on from Bitwise, who's an outstanding speaker and guest on the show, and he explained kind of like it's kind of like a minor drag for investors to have that little. It's kind of like a less optimal efficiency for the create redemption. But in your guys' case, you all have this create redeem in kind. So in your opinion, how significant of a role, will this play in kind of attracting investors? It certainly seems like a cool feature, but I'd like to get your take on it.
This is really the ace up our sleeve, and there's an important distinction to make. An in-kind creation redemption can be either with the authorized participants who are creating and redeeming units in the fund. They can either do that by buying the Bitcoin, or they can do it in kind, which is they use their reserves or they take the Bitcoin on a redeem, blah blah blah. What makes us globally unique, and it's a huge game changer. People who buy on the exchange can come to us and say, I've got 1 Bitcoin worth of units. I want to take self-custody of that Bitcoin. And ultimately, being Bitcoin, it doesn't make sense to have all these ETFs, spot or not, and the only way you can claim it is back into cash. The point of Bitcoin is to be self-sovereign. So realistically, if you're going to make a Bitcoin product, it has to have that redeemability function built into it, or else it's just another financial instrument tracking something. This is not just a financial instrument. This is a Bitcoin product that allows people, when they're ready, to take self-custody. 2 things led us to this pathway. One, us being Bitcoiners and believing that everyone who has a Bitcoin product should have the option, not the obligation, but the option to take self-custody. And 2, when we were designing everything, we came across an old gold ETF that was in the structure of a bear trust. And reading through the fine lines, we discovered that in very small print, you could put a request in to have that gold delivered to a vault in London and then go and grab the gold. I'm not sure if anyone ever did that, but that was the whole point of that legal structure, was to give the investor ultimate beneficial ownership of the underlying asset, which realistically, when thinking about Bitcoin as the self-sovereign asset, it's the ultimate dovetail into what a Bitcoin ETF should be structured as. So that's why we went with that.
Let's briefly talk about Australia's institutional crypto product market, Grayson, and why it's potentially a favorable environment for regulated products. A lot of this thinking is predicated on the superannuated pensions framework, particularly what they call, I believe, industry supers over there, which might be interested in allocating to Bitcoin ETFs, when they're available. So you suggested the IBTC structure gives it an edge in terms of suitability for allocation in an industry super. Can you give us the basis of that view, please, Grayson?
Yeah, so just for context, superannuation is Australia's pension.
Yeah.
I think there's about $4 trillion Australian dollars locked up in it all. And essentially, as you would imagine, every paycheck, a little bit goes into your super fund and you get it when you retire. None of these big supers have a Bitcoin allocation, despite there being different levels of risk that people can choose from when they sign up for these supers. These supers have had a huge problem recently with underperformance. These guys are getting like 3, 4, 5% per year, and it's just dismal. So there's obviously a problem there. They need to do something to get better returns, and they need to get with the times. What better way for them to do that than have a Bitcoin allocation? The problem with that is that if they want to get anywhere over 5% exposure, they have to have the license that we've got. Now, I think there might be 2 other players in Australia which have this license. They're not going for any ETFs or anything. We're the only ones. So if any of these industry supers want a bigger Bitcoin exposure for their more high risk models, they either have to spend all the years going through all that, or they can leverage a product like ours. As we've talked about, Australia's appetite for Bitcoin is tremendous. People like a punt, not that Bitcoin is a punt, but the risk appetite is definitely there, and people are fed up with 3% a year returns. So that's the opportunity. And when you think about it in terms of the entirety of Australia DCAing into Bitcoin with their superannuation funds, that is not only just good for the Australians, that is so good for Bitcoin. And that was one of the goals that we had when we started out at Monochrome was, all right, let's one day get Bitcoin in the everyday Aussies super fund. So that's where we're aiming for.
I think a lot of folks are familiar with the concept of, a self-custodied or like a store of value, that Bitcoin, the technology provides, and its use cases at more of a personal individual level. But, what you've highlighted here with the Australian pension system is certainly not unique to, other pensions across the globe. And seeing how Bitcoin can fit in solving, those issues of potentially underfunding or, years of underperformance, creating, unfunded liabilities, I think is something that most people don't think about, particularly from an institutional standpoint, and its demand and the institutional audience's demands for something like Bitcoin, and to have that strategically as allocation into portfolios, dollar cost averaging in, all that good stuff. But perhaps maybe for the last question, if you don't mind sharing, what you're comfortable with, there's, what are some of the future plans for Monochrome? What's around the corner? We're very happy to see IBTC coming onto a listed exchange now. But is there anything that you can share for, the look ahead?
Yeah, I mean, look, for a license authorization, we have to run 2 schemes, in fact. And the only 2 assets which that license permits is Bitcoin and Ethereum. So I think we can draw some conclusions from that. Otherwise, we've got some things in the pipeline as a corporation, rather than just Monochrome as an asset manager. More bespoke kind of mandates for clients who want to do things that outside of a vanilla Bitcoin or Ethereum ETF. And also, we've recently partnered / acquired a foreign exchange business, and so we're doing a bit of work there. But look, similarly to the industry as a whole, I think the ETFs are really just the start of everything. And where we go from here, I don't know, but it's gonna be an awesome ride, and I'm looking forward to it.
Exciting times ahead.
Congratulations to you and the entire team over there at Monochrome. I mean, this is big. These next few weeks and months are going to be possibly just as crazy as the first 4 or 5 months of the year, as we potentially get some more news coming in. But, Hong Kong was big. Australia is big. Monochrome is at the top there in terms of the news flow, and evolution. So well done, and all the best in the months and years ahead for your new fund.
No, thank you very much, and thank you to you guys and your team for supporting us and helping us get to where we are. Couldn't have done it without a solid benchmark. So yeah, it's been really good.
Brilliant. Thank you very much for joining us, Grayson.
Thanks,
Grayson. Don't be a stranger. Come back anytime.
Yeah, please.
100%.
Yeah. So, Gabe, what did you think of that? I think I learned an awful lot, as I normally do when I speak with our Australian colleagues. Yourself?
Yeah, I think it's just really interesting, getting other people's perspectives from other regions, literally on the other side of the planet from where, we're at on crypto, on Bitcoin, and hearing about the use cases, the needs, the demands. And again, like one thing that I really found interesting was just talking about these industry supers, the topic that you brought up there, and getting his view on the pension system in Australia, how that works. I mean, certainly I think a lot of people can relate to, hearing about pension systems across the globe, having these underfunded status. And, when we do these back tests on adding Bitcoin allocation strategically to portfolios, even just, 2, 3, 4, 5% allocations has such a sizable impact on returns, historically speaking. So, it's really interesting to kind of get another region's point of view, hear like the institutional use cases, their demands, their needs. I think a lot of time we spend a lot on just maybe the individual or retail investor, but it just shows, I guess, how widely useful a Bitcoin allocation can be, right?
Yeah, absolutely. And, just overall, to wrap things up, I just found it really fascinating to get that recap of the journey of the Monochrome Bitcoin Fund, formerly Monochrome Bitcoin Trust, and Monochrome, the company, the asset management firm, as well as, of course, key people like Grayson and Jeff, who we mentioned. Because, being there from 2020 to 2024, as the regulations formed, as the guidelines were formed, as the sort of like the sort of firm started to interact with the market, sort of launch products and launch private funds, as Monochrome did, and reached today, whereby now they're about to launch a listed a Bitcoin ETF. I think it is testament to the fact, to those holdouts who, we all know they exist. This is a fad. It's crazy. It's primarily for crime. It's this, it's that, and so on and so forth. This thing is real. It's here, and it's ready for institutional and also, most importantly, individual use. So, guys, we really appreciate you for listening into this one. I hope you found it as interesting as we did. And if you did, don't forget, you can find a whole host of other episodes on your favorite platform, whereby you can just type in CFB Talks Digital Assets and find episodes numbering, I believe, now into the high 20s. Apart from that, if you liked more written content, cfbenchmarks.com is the destination to go to find all of our written content, like Gabe's market monthlies, quarterly attribution reports, and other blog items. Apart from all that, As I said, we really appreciate you joining us for this episode, and we hope to see you again for another episode soon of CFB Talks Digital Assets. Thanks for joining us.